The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, from the words of Trading Places, here we are in TFNN, getting ready to start one of the most active astrological sequences of events that we're going to see in quite some time. I'm going to start out the show here with the soybeans because we're going to have Rich Anderson on Monday. He's going to come on the show. I talk to Rich almost every day. And he's been incredibly busy, as you can imagine, with all the stuff going on. We were talking when I was filling in for John Logan, about the markets being real active and, the lack of sleep. Folks, I have been operating on 4 or 5 hours sleep for as long as I can remember. When I was a youngster, I served Mass at St. Benedict's in Terre Haute. I would get up at 5:30. I'd ride my bike to the rectory, wake up the priest at 5:45 and be ready to serve Mass at 6:15. I did that for many years until I started into high school. But I've just always been, and when I was in college, I worked as a scrub nurse in an emergency room, a 300-bed hospital there in Terre Haute. So I worked 11 to 7 shift there and then went to college, during the day. So I've had an erratic sleep pattern, but it seems to work for me. So I don't, I have periods where I don't get as much sleep as I probably should, but I do get sleep during the day. I take naps, and I try not to get overtired. But when I'm overtired, what will happen is most of you that trade, you'll make errors. And when you start making errors, you know that you're at the limit. You got to back off because it'll just cause another error. And that's what I've done the last few days here. Is I've had 5 errors in the past 7 trading days. 4 of them were in my favor, and 1 was against me slightly. But the fact that 4 were in my favor was shocked me. But I happened to be on the right sides of those markets, so that was probably helping me out a little bit. So remember, you start making errors, buy-sell errors or quantity errors, failure to change orders and stuff like that. That's a sign of fatigue, and you want to, sort of back off a little bit and, take it as easy, as you possibly can. But we didn't have these 24/7 markets, for very long. We've only had those about 8 or 9 years. So we've got to be able to look at. The first chart we're going to look at here is the soybeans. As you can see, we've got that big move that we caught, back in May. There was a nice $1.50 rally. Basically, it was a weather scare. And then we've had the big correction. And if you notice the big ABCD pattern here in the beans, what we're waiting now, we've been down here for 2 weeks and have gone nowhere. So we're waiting for a smaller pattern to evolve, a little butterfly or a 3-drive, and give us a place to enter the bean market. And sometimes you have some really good rallies into the harvest season. That's most of the time when you have selling, but there are aberrations, and if the chart pattern, matches to what you think is going to happen, then that's what you want to do. But right now, all I'm doing is waiting for the soybeans, to bottom in here. I'm also watching for a potential bottom in wheat. We made new contract lows in wheat just recently, and also in December corn has gone down quite a bit. So both of those are due for rallies, and that's what I'm watching. The overall, content of the commodities is still, up for grabs. And one of the things that I watch with the commodity markets are 2 of the major cross rates that help us with commodities. The first one I'm going to look at is the New Zealand dollar, also known as the loonie, and you can see that we're coming up to an area where we could get into an area where we're going to touch that 20-min line up a little bit higher. If we could get that in there, that would also complete an ABCD pattern. And this is a long-term monthly move. This chart is furnished by my partner, Jim Bartolioni, the former F-16 pilot, and he does an incredible job with his charts. And this is what watching the measured moves that we've had in the New Zealand dollar, over a period of time. Now, the second one that we watch is the Australian dollar. And here again, we're going to see the same type of move here with some of these things here. You'll notice that we're seeing similar moves in the Australian dollar like we are in the New Zealand dollar. And that's what we're watching to see if we can come up with some type of a bottom here. And as you can see, we are near a cycle bottom going back over the last, 15 years. And it actually goes back farther than that, goes to 1986, the last 30 years. And we have a 15-year cycle that came in on March of 2001. And we've got another one that's going to be due pretty soon. So we're watching the Australian dollar for a potential bottom. And this should be at the same time when we're bottoming in commodities, because Australia is very big in coarse iron and gold and silver and oil and stuff like that. So not as much oil as other places, but it still does a great deal of exporting to China. So we could be watching that. Now, there's a couple of charts that I want to show you that I think are important, but one is really interesting. It's from my friend Steve Moore at Moore Research. Steve Moore probably does as good as, well, not probably, he is as good as researcher as there is in the business, in my opinion. He is really, really smart. He's up out of Oregon. He happens to be a good friend of my friend Jim Twentyman. I've met Steve a few times, but he does a lot of correlation charts. He uses commodity code graphics that allows you to do these types of charts that we watch for correlations. And as you can see, what he's doing here, he's correlating the stock market from 1996 through where we are now, and you'll notice that there's a high correlation. It says there could be a bottoming process here in early October, which that could be, in fact, exactly what we're looking for. So we want to watch to see if this is going to be correct. Now, remember, correlations are far from perfect. All they are is guidelines, but you want to, try to look at something, try to be the devil's advocate. And, the old adage is if you're in a race and you're leaning towards the starting line and the gun doesn't go off like it could be, you could be off balance. So it's best to have both feet on the ground, ready to move in either direction. Trade what you see, not what you believe. So allow this to just keep in mind that there could be a major bottom coming down here into October, which is what I think could happen. But we'll see if this correlation continues to work the way it is. But if you're interested, Steve Moore is, you can get him on the internet anywhere. His phone number is 800-927-7259, and his website is www.mrci. That's more research. I don't know what the CI is for. mrci.com, and it's very inexpensive for what you get. But he does an incredible amount of work with grains and metals and livestock. He's the premier guy for seasonal studies, and he does really a superb job. Now, I've had a question to take a look here at the one market that someone has asked about, and that is the Nikkei Dow. If you'll give me 1 second to pull it up. Here we are. I had it all ready to go, but that's not the one I wanted to see. Just give me a second. Oh dear. Trouble is, I do so many of these getting ready for the show, I lose track of where they are, and that makes it a little more difficult to take a look at it. Oh, I know where it is here, I think. Yeah, here it is right here. I had it all ready to go, and I just didn't have it correct. Okay, this is the Nikkei, and you remember on Tuesday of this week, it had a 7% rally in the Nikkei after we broke below that 50% level. And as you can see what a 7% rally looks like, we've since given back 5 of that 7%. We're back down below that 17,900 level. And it looks like we're heading down to 16,000, another 10% or so in the Nikkei is what this particularly looks like. But we have these really violent reactions because of what happens in one market turns around and happens in another market, very, very shortly. And that's what makes it, really interesting with some of these things. So this one is still going down. We have the DAX market has also turned the corner from last week, where we made a 382 at a 50% retracement of their contract highs. So all of these different countries did the same thing. After the bottom on August the 24th, it had these 3-week rallies into these highs that we made, where we're right spot on fib numbers. So as long as we don't take the highs out of this past week, it looks like the preponderance of evidence would be telling us that we have a tendency to go down. But these are just tendencies. They're never certainties. They're only probabilities. Now, when we finished the John Logan show, we had featured a chart that came from Deutsche Bank, and I wanted to bring that chart up because it was about evaluations of the different things. This is real estate, jewelry, automobiles, everything is included in this, and it's showing that there's peak valuations over many years. This goes back into it's almost 200 years. Evaluations. You can see, during 1980, we had during 1929, we had very low evaluations. And then again in 1980, we had low evaluations too. That's when the Dow bottomed in 1980. I believe the real bottom came in 82. That was August the 9th of 1982. There was a huge astrological conjunctions at that time, and that's when Paul, what was his name? Oh dear, the guy from oh dear, I can see him sitting there in the boardroom. Oh dear God. Oh well, I'll remember in a minute. Anyway, he ran Solomon Brothers, and the Solomon Brothers bond gentleman, and I'll remember his name in a second. Wish 21's here to help me, because Jim and I had lunch with the guy once. And but anyway, he came out in Wall Street Journal and said this is the bottom of the bond market, and boy, it was. And it turned out to be the bottom in the stock market, and away it went. And of course, bonds have been going up for 32 years, as have stocks. So those were the areas of low evaluations. This is when we had the lines for driving right after the Iran boycott of oil, when we had to wait for gas and stuff. That was a really sad part of our history. So we're at a high level of evaluations, and we wanted to to keep an eye on some of these things to see what's happening. What is that guy's name? Oh dear. Oh, gosh, I can remember the story. He was the guy, it was with Solomon Brothers, and he said that we're not going into junk bonds because, Drexel was heavily involved in it. Milken was running the whole thing, and he got up in the board meeting, and the reason why I know this is his assistant. That's it. You got it. Kaufman. That was it. And I can't remember his first, not Perry Kaufman. That's the other guy. What was his name? Oh dear. Oh, well, anyway, we'll forget it. Henry Kaufman. God, thank you so much, Mr. Z. You're always got my back. We'll be right back after these few words, and I'll finish that story.
The TFNN End of Summer Tiger Dollar Sale is here. We've just announced our best Tiger Dollar sale is back for 5 days only. This week, you can get up to a 40% bonus on whatever you spend when you purchase Tiger Dollars. Tiger Dollars are the best way to lock in added value and extra savings for any of your TFNN products or services. Normally, we only offer a 10, 15, or 20% bonus, but for this week only, we've doubled all our bonuses and are giving away 20, 30, and even 40% bonuses on all Tiger Dollar purchases. Tiger Dollars can be used for any TFNN product or service and never expire. So whether you're a subscriber already or planning on trying out a product soon, now is a perfect time to get your Tiger Dollars. For more information and to purchase your Tiger Dollars today, visit the front page of TFNN.com for all the details. Remember, this sale ends Sunday, so act now and don't miss out. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I should finish this story about Henry Kaufman. Henry Kaufman was running Salomon Brothers. He was a chief economist, but the bond market did pretty much what he told him to do. He was really a powerful gentleman. He turned down Secretary of the Treasurer twice. And anyway, he was at the meeting. I happen to know this because his first assistant, Jerry, happened to be a friend of mine later in life, and that's when I heard the story. But he was they were debating whether Solomon should go into junk bonds, and the partners wanted to do it, and Kaufman said, no, it's the wrong thing to do. And he got up and he said, ladies and gentlemen here at the board, he said, if you decide to go into junk bonds, he said, and that's what they are, you can call them whatever you like, but they're junk. And if you decide that that's what you want to do, my partnership is for sale for 50 cents on the dollar right now, whoever would like to take it. And after about a 30-second debate, the chairman got up and said, well, if that tight old dude is going to sell it for 50 cents, we're doing the wrong thing. And they didn't go into junk bonds, and that saved them billions and billions of dollars. So, okay, the first chart that we're going to take, oh dear, I hope I can get it in here. I hope my chart for gold posted, because we're coming into this area that we've been talking about in gold for quite a while. And that's down here at this $10, 1,093 level in gold. We're only $8 away. But let me see if I can get this. This is having the same problem that I did before. Let's see if I can get it to fix. I hope I can. No, it's not working again. Doggone it. What's the problem, folks? What's the problem? They just don't like me. These computers. Anyway, I'm sorry. I'm going to try to get it fixed during the break if I can. Did my other charts posted okay, didn't they? You know what? The problem is they're not posting from Ensign. That's the problem. Wow. I wonder what that is. Okay. Okay. Okay, anyway, we'll get this chart up to let you take a look at it. I'll figure out how to see it, but the ABCD level measures down to 1093. The trouble is, folks, you don't want to buy gold today for two reasons. First of all, it's not at the target yet. The second reason is you're coming into these this big astrological stuff. We have Mercury going retrograde on Monday, the 14th. We have the Jewish holiday starts of Rosh Hashanah, which is all part of the Hebrew Bible. We also have the solar eclipse, a new moon. So we got a lot of things occurring. So you're probably going to see a huge amount of activity in a lot of different markets coming in here on the on Monday. So that's why I would be really, really reluctant, to do anything at that time. Until Monday. Monday would be the time to look at it. We'll be here on the show. We'll be able to watch it. We'll have Rich Anderson on, give him his views. But, we got silver breaking down now. We broke, silver's down, just broke $14.39 per ounce. So the rallies that we've had in all these commodities, with the exception of copper, have not been, not been very impressive at all. And so I would think that you certainly don't want to be a buyer, of gold down in this area for, any appreciable move, because of the fact that they just got the timing part, and gold reacts extremely well to full moons and new moons. And we've got this new moon and solar eclipse, coming in on Monday, and with Mercury retrograde, that's a time when, you don't want to make as little as decisions as you possibly can. So you don't want to be able to do that. There's been a little debate about the difference between astronomy and astrology, and all I can remember is from reading some of the stuff from you go years ago when Kepler and Newton were arguing about astrology and stuff like that, and Newton said, "The difference between you and me, Dr. Kepler, is I've studied the subject and you have not." And astrology is basically making an interpretation of what you're seeing astronomically. That's really what the bottom line is, the difference in that. And believe me, if you have an astrologer that really knows what they're doing, folks, those folks know something. I don't know how they come up with these things, but I've never been able to read a chart. I've never had an interest in that. I've only been interested in the days of what the cycles are doing. That's the only interest that I've ever had with it. And the other part is so far over my head that I don't even want to try to contemplate it. But some astrologers are really good about things that you want to be doing and what you want to be looking for, or what might be getting ready to happen to you. It's so good that when I was born in Indiana, Clinton, Indiana, back in the 1940, the hospital had burned down, so I didn't have good birth records. All I knew was the day I was born, which was July 28th, and I knew where I was born, Clinton, Indiana, but I didn't know the time. Two astrologers, two different times, came within 5 minutes of when I was born, and that was corroborated by my aunt. All right, we'll be back, take a few words here, and then we're going to look at some of these markets.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted a couple of charts into Tiger TV here. The first one was the one of the New York Stock Exchange Index showing the ABCD move. It also shows the exact 61% retracement that we had from the low on the 24th from the high on August the 19th. That was an exact 61% retracement. Now, we did not take that high out in the New York Stock Exchange Index. We did not take that high out in the cash S&P Index. We matched it in the futures. The September futures went to the exact same price at 1992, and the NASDAQ went slightly higher, trying to complete a 61% retracement that it missed by about 10 points. And that's, really what we're looking at here is a 3-week rally in stocks coming off that 24th. Now, we're 100 handles away from the bottom. We're trading around 1940 or so in the S&P, and our old low was at 1930. So we could very easily, a couple of really bad days, we would take out that 1830 if that were to happen. and then we'll go down. Now the other alternative here is that we mentioned that chart of Steve Moore that we could be looking at some type of a major bottom through here, but even with his work, we're not looking for that until early October. And with September and October being the two most negative months of the year, you want to try to time your patterns to get into some of these long trades, because I think if we do have a bear market here, it's going to be one of the worst ones in a while, because we had the best market we've ever had from 07 through 2015. I think it's the biggest move we've ever had. We had 18,000 and change, so we could easily be in for a bear market of a couple of years. And like I mentioned, crashes, they're actually great buying opportunities, whereas a bear market, that's the one that's built on false hope. Remember, things start to go down, and everybody likes to buy things when they're on sale, and it's a good buy at 20, it's a good buy at 15, it's a good buy at 10, it's a good buy at 5, and it goes back to the old market adage, it's good buy house, good buy boat, good buy car, good buy wife, so you got to remember to put a stop in on some of these things, because sometimes these markets can drop a whole lot more than what you think they can do. So we'll keep this in mind as we look at some of these markets where we've opened today, and it looks like we're going to be jumping around like we always do, and markets having a little bit of strength right now, but very little, with Dow's only down 42, the Nasdaq's down about 10, and so it's really really kind of quiet as of yet. So we'll have to hold on just a second here, because my clock on the wall tells me that silver has just made new lows again, which is another sign that telling us that we're probably getting ready to look at some lower prices in this gold, that we're getting closer to that. We just came within, see, we got gold down to 10.99, and we're going to have to turn this beeper off in silver. Just give me a second. I've had this on for quite some time. I wanted to see if it would get here, and we certainly are. So I just need to take a moment to turn it off. I wish I could post this, because silver right now is setting at a 61% retracement of the move from the 26th of August, where we hit 1390. The 61% retracement on silver comes in here at 1430, and that's exactly what we've hit so far. So keep in mind that this is going to be a real interesting one, to see what's going on. We're trying to get stocks into unchanged territory. We'll probably be able to do that without too much, being the fact that we've got the this big holiday coming up. And believe me, the week of that Monday will be a very slow day in New York, folks. That is a big holiday in the capital city for finance, so that will be a little bit slower. The reason why I had that beeper on in silver at 1431 was because I wanted to see how it handled the 61% retracement of this whole move, because silver went from 1390. I just no way I can post this. For some reason I'm not able to get the chart to post. I'll try it, but I don't think it'll work, and it's just a little frustrating for me not being able to do some of this. No, it's not going to work. I have to figure out what the problem is, but if I copy it and put it in my desktop, then I'm okay. But I think the time to look at this will probably be Monday. We're having a really big wide bar down here in the silver. We've already dropped 30 cents in this bar this morning. This is not the time to try to pick a home run a trade of any stretch of the imagination. So don't do anything like that. But Monday will be the time, because we've got the lunar thing is happening, and we also have the situation with the solar eclipse, and Mercury will be retrograde, which would be a lot of reasoning to see what's going on. If you really want to buy silver, you can buy it, but you got to risk about 10 cents from this level, which is certainly acceptable if that's what you'd like to do. But the fact that this market has come down so quickly, so fast, I don't trust it. That's one of the things that pattern recognition has told me through the years, is that when you have an outlier event, which a bar that is 5 times normal that's telling you that there's a great deal of selling coming into the market, and you don't want to stand in front of that freight train. It's better for let the market, come to you, and then you have an easier time, to pick a spot where you want to be, either the buyer or the seller. That's the key thing of what we're trying to do when we're watching this. So hold off on buying silver and gold. We're only $6 away in gold, but again, this is a Friday before all this big stuff over the weekend. It's better to wait, make sure that cycle's going to be in, because this thing might make a 786 or a 1.27 expansion. We don't know. This is some really heavy cycle stuff that we have going on here. So it'll be interesting to see, what happens with this as we proceed, through the day as our trading goes on. But it's just not the time to buy it just because of this long-ranging bar to the downside. Okay, we've had a request to take a look at one of the cycles that I've been talking about, and that is this lunar thing that's happening here. We'll post this in here to take a look at it, because this is from Victoria Martin. She's out of Chicago. She happens to be my personal astrologer. She's one of the ones that told me the exact time of my birth. My aunt knew that it was sometime really late at night on July 28th. Bill Meridian out of Austria, who's my frequent guest here from Cycles Research, he rectified the chart, and the way they do that is they take the certain things that have happened in your life and they put it all together and says this is the most logical time for your birth. And he came up at 10:55, and Victoria came out at 10:50 p.m. So I have to assume that was the exact time of my birth. Well, coming into Monday, we have a solar eclipse. We also have the Mercury is going retrograde. We have the new moon, and then we followed by the lunar eclipse coming in on 9/27. This is the same type of scenario that we had during 1987, during September of 87, on around the 25th or 26th. We were bottoming in an eclipse. We rallied up into October the 6th, I believe. I believe it was October 6th. And then from there, we broke down to the greatest buying opportunity in the history of the world. But at that time, it was certainly not viewed as that. Oh, we've got a good caller, Bob from Connecticut. Are you there, Bob?
I am. Good morning.
Good morning to you. What can I do for you, my friend?
I have two quick questions for you. If I'm interpreting correctly what you're saying, that Monday, astrologically, we could see a short-term bounce for 2 or 3 days. Is that correct?
No, what I think it is, I think that the market actually topped on the 9th. That was the day we went up and had that really big overnight move. We had the 350-point move on Friday and another 190-point move overnight. And then we had the big correction. I think that's where we're going to accelerate from the 14th to the 27th. Now, that acceleration could be the upside. It could be the downside. A lot of it will depend on where it closes today. If it closes really strong today, we could be looking at a really strong market. But remember, on the 19th of May, when Mercury went retrograde with the new moon, we started down. So that's what I'm assuming might happen again. Okay. And what was your second question, Bob?
On your charts, you use a 20-man line, and I haven't been able to really find any information about that.
No, he doesn't. He doesn't share that information. But Bob, what it is, if you'll connect points on a trend line that match to touching old highs, as you can see, that acts as a fulcrum to push prices or catapult them, into stronger areas. And we've had a lot of those 20-man lines recently because of the volatility that we've had in some of these markets, and about 8 out of 10 of them have worked. But all it is just a line that touches previous trend lines. And then when it comes up to it, it acts as resistance. And when it pulls down towards it, it acts as support. That's basically the bottom line. Jim used to draw. Oh, he had so many lines on his chart, sometimes you couldn't even, see what they were. Now his charts are pretty much blank. He just looks at the chart and he knows what he's looking at. But in the early days, he drew all kinds of lines, and this is one of his favorites. And it's one that's worked well through the years. But that's why I gave it the name of 20-man line, because that's the only thing I've ever known it as.
Very good. And I've been praying for your friend who's undergoing surgery. So,
Yes. Yeah. Thank you very much. I appreciate that very much. It means a great deal to me. Thank you.
have a great day, Larry. Thank you.
Thank you, and a happy holidays to you, and may God bless. Okay, now we want to move on to get back into the cycle stuff that we talked about. So I'm not sure whether this event is going to transpire the way that I think it is. Remember that all of your expectations in the market, the frustrations come from unfulfilled expectations. So try to be reactionary to it, and just to be safe. That's really what you're really trying to do when you're watching these things unfold. Now, one of the other charts that has been the leader of this market from the very beginning, and that has been the banking index. And as you can see, the banking index, all it could do was make a 382 retracement, and we didn't even take that out during the last rally. So the banking index has been incredibly weak. And the other one that has been the strongest of the group, which is the biotech index. The biotech index on Wednesday hit the exact 61% retracement up there at the 359 level, and just basically backed off a little bit yesterday. So as long as it stays below 359, it has a propensity, I think, to keep the market on the downside. But the banking index in particular here looks very, very bearish, because it had been the leader all the way up, and now it has not rallied very much. And usually that rotation means quite a bit from the point of view of what we're watching here. Boy, I can't believe how fast this has gone. I've been watching some of these things for quite some time, and watching them unfold has been really great. Now, if they're going to happen the way I think they're going to happen, we'll see if this market is ready to sell off into next week. If not, we could be looking at a market that goes another 2 weeks higher into September the 27th, and then we'll find out what's from there. But the overall breadth of the market, I wanted to bring that to your mind, to your attention, because I think this is really a telltale sign, because the breadth of the market is still extremely bad, folks. We really had very little bounce here in the advanced decline lines. And then if you look at the far right there, if you look at the new highs to new lows, you're also looking at a situation where the market continues to make new lows. Even on days when we're up 400 and 500 points, we're not making new highs in a lot of these stocks. And that's, usually a bearish indication, which we've been bearish since May 19th. Even though last 3 weeks we've been to say we've been volatile is the understatement of the year. But that's neither here nor there. We're going to see increased volatility. There's no question about that in my mind. The volatility is going to keep getting bigger and bigger as we go through these days of September and into October, extending all the way through October 9th, which I believe will be some type of a culmination of whatever is going on in these markets at this particular time. The Chinese market is still incredibly weak, as we pointed out. The Nikkei is incredibly weak. The Hang Seng is also very, very weak. All of these have closed below really strong fib points of 618 or 786 levels, which tells you that the market is really quite bearish. Now, I think we have coming up here to take a little break here towards the end, and then we'll see what happens here, and we'll go from there, and then we'll see. Okay, the next thing that we want to cover here, I don't know why. Here comes the break. Sorry, we'll be right back after these few words.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, Trade LABU or LABD. Directions Daily S&P Biotech 3 times Bull and Bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, I want to end the show by talking about what happened in August. You know, we were down 6.5% in stocks, culminating on August the 24th when we were down 1,100 points in that flash crash. Since that time, the market has rallied 3 weeks up to some pretty key fib points. If you look at this long-term chart here, this is the first time in the last 3 segments. One happened in 2000, another happened in 2007, and again here in 2015 where we've broken some swing points. But the thing is, this year we've broken it faster and with more gusto than ever before. So just be really careful up in here if you're long a lot of stocks. The market can't handle a great deal of selling, as we can see on the day of August the 24th. We had moves in stocks that were, $20 away from where they should have been, most probably. So just be really careful in here. If you're a long-term investor, I guess you just forget about it and do what Warren Buffett says. Stocks will be higher 10 years from where they are right now, and he's most probably right. But a lot of things can happen in 10 years. You might be able to buy things a little cheaper, than where they are right now. So just be careful. We're going to be in extremely volatile times here for the next several months, as near as I can tell. And I certainly appreciate all the cards and letters that I've gotten, emails, and I am doing okay, and looking forward to this coming week. And in fact, the coming 2 weeks should be really quite active. So with a little preparation, we should be in pretty good shape here to look at what some of these moves start to unfold. But it does look like this week coming up with the lunar eclipse coming in on the 27th. The solar eclipse comes in on Monday with the new moon on the 14th, along with Mercury retrograde. I would really be reluctant to do anything until you see how that cycle pans out. That's a big cycle. Remember that from May 19th when we had Norman Winsky on the line, and he told us about that Mercury retrograde coming in at the new moon, and we have that same thing happening again on Monday. So it's certainly not worth it. And it's also the the Rosh Hashanah Yom Kippur segment of the Jewish Bible, High Holy Days, and it'll be slower in New York on Monday for sure. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.